What's going on, everyone? My name is Nicholas Merton here at DataDash. Today is March 8th of 2022. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about why right here, right now, we may be seeing crypto's breakaway moment. Why we may be seeing, in a world of growing uncertainty and chaos, how crypto can shine as a non-correlated asset with a finite supply that allows anyone to protect and hedge themselves against the uncertainties of the world. I know it's a pretty radical narrative, as we've heard so much about correlation with Bitcoin against the stock market and other asset classes, but I'm going to challenge the narrative here today, and I want to show you why I believe it's not the case. So let's go ahead and start by not diving into the Bitcoin chart, but diving in here towards looking at the Nasdaq. Now, for those of you who may not know, the Nasdaq is one of the broad indices, one of the broad index classes for the equity markets. It measures thousands of companies publicly traded on the stock market in the United States and abroad, and there are other indices like the S&P 500 and the Dow Jones. They give us a general broad performance of how the biggest asset market in the world, or excluding real estate, the biggest asset market, stocks in this case, performs over time. And when we see it generally trending up, the stock market's doing good, and when it's generally trending down, stock market is entering into turmoil. It's correcting in price. People are valuating companies less than they were before. Now, when you look at this chart here, we see, as we talk a lot about here on the channel, the clear indicative signs of a downtrend, of growing fear. We see lower highs in price over time, right? Lower significant highs. Each time price gets a chance to rebound, we face similar resistance or are going to lower levels. And on top of that as well, we're setting in new lows here, right? And it looks very much like when the markets open here in the next coming hours, we are likely going to see a drop down below as well. Another new low in equity values, right? So the trend is very clear here that the market is generally concerned about what's going on in the world right now. They're concerned about the domino effect that the conflict/war in Russia and Ukraine could turn into. Right? They're concerned about the global supply chain issues that have still persisted since the pandemic starting in 2020, and how all these things together are going to lead into a mass domino effect of uncertainty across the world, increase in conflict, territorial wars. And with all of this, people are looking for a safe haven. Not to mention as well, one thing I think is important to note when we're talking about the point of crypto is countries getting shut off from payment networks. Liquidity flows from various countries, from commercial banks and governments and central banks getting shut off from one another. Over the past couple of decades, the past 2 decades, so to speak, we've been in an era of globalization. Everything has been built perfectly to a T to make sure that everything runs efficiently. And now that can be jeopardized. So what do people do? Where do they go? Well, a lot of people would have argued the idea that cryptocurrencies could be a risk-off asset, a non-correlated asset, something that people could go to for hedging against inflation and uncertainty, was a fool's gambit. Just back a month or two ago, people were saying, see, the Nasdaq and the stock market as a whole are dropping down and crypto is following it. Therefore, crypto is a risk-on asset like the stock market. It's directly correlated. It must be. Well, people have made the same argument that it's exactly correlated with gold, and it's correlated with this and that because over the past week or month, it's done the exact same thing. The correlation isn't always causation. And I want to go ahead and talk about one of the most interesting charts that I think no one is watching at the moment. It's something we like to do here on the channel from time to time, and it's analyzing ratios. So let's go ahead and take a look at this chart here. Now, we've looked at the Nasdaq here. And ideally, if the narrative is true here, that the Nasdaq and the stock market as a whole are a set of risk-on assets, stocks are risk-on assets as a whole, and crypto is supposedly a risk-on asset, as most people believe, then we should be seeing not only the Nasdaq declining over time, but we should be seeing Bitcoin decline even harder than the Nasdaq. Well, we can simply do this by going on to TradingView, which we're using now, and typing in BTC USD divided by IXIC. It's Bitcoin divided by the Nasdaq. Take a look at this here. What would you guess? we're not making lower levels. In fact, since back here in January, Bitcoin's been gaining against the Nasdaq. Now, it doesn't mean that even though a ratio is increasing, right, upwards, it doesn't mean that the core asset at the start of the ratio, Bitcoin in this case, can't be going down in dollar value. But we'll take a look at the Bitcoin chart in a moment, and I'll build on this point as to why I think it's a sign of confidence. We can see here that all the while since back here in November of 2020, you can see that Bitcoin has been establishing higher lows, higher than where we were back in July 2021, right? And back here since December of 2020. You could have bought during any of these periods of fear here in the market, right? Back here in July, and you've outperformed the Nasdaq 47%. You've outperformed the Nasdaq back here in December of 2020 by 112%. This isn't the narrative that I'm hearing so much about. I'm hearing so much about correlation in these asset classes, when in reality it's establishing significant higher lows over time against the Nasdaq, which in general sense of things, as we're seeing most asset classes decline, excluding commodities, Bitcoin's holding out relatively neutral. Let's go ahead and dive into the chart here to dive further into this, right? Because it's important to analyze the actual dollar term chart as well. And what do you know? Since back here in January, before the conflict really got serious between Russia and Ukraine, and the global domino effect really came into many people's peripheral view, this idea that we could really start to see some uncertainty across the globe. All the while commodities are spiking, all these other things are happening, currencies are being devalued. We're seeing Bitcoin still hold up here pretty good. Pretty much back where it was here in January 2019. Almost back here we were on January 10th of 2020, right? And again, we can see here that since that time period, the Nasdaq has been continuing to decline from around 15,270 points down to 12,830. Very, very different trend here. And you don't hear people talking about that correlation anymore. That's really strange. Well, again, correlation isn't always causation. And short-term similarities in price are not enough of an argument to clarify or claim such an exacerbated claim that Bitcoin is purely a risk-on asset, just like stocks. Not all stocks are risk-on or risk-off, right? Sometimes they vary. Some are more protective stocks that have healthy dividends, and other ones don't pay any dividends and are purely speculative. People are just simply buying it because of the future potential of the company. And the same goes here for cryptocurrencies. There are speculative altcoins out there that'll probably do terrible in the environment we're in. And on the other end, there are also well-established cryptocurrencies that have a major network effect and a solid monetary policy that make them effective stores of value, effective hedges against inflation. And I think that Bitcoin, Ethereum, and many leading cryptocurrencies will be able to fill that void here as we go into the new year. And that's a narrative I want to continue to talk about here. Now, we can see here that price is coiling in Bitcoin. All right, we've got these lower highs here since back here in March and higher lows. We are wedging in here for either a significant breakout or a significant breakdown. One of the two is going to happen here. I would say though, and I'm going to continue to make this case here, and I'll talk about it a little bit as we go through the video, I think we've got a chance to really break through here in a world of growing uncertainty, where Bitcoin could start to spike up here going into the spring, into April and May. Okay? Now let's take a look at another one here. Now again, Ethereum, right, which has been outperforming Bitcoin over the past couple of years since 2019, right? A little bit more kind of risk on in most people's eyes, right? Well, take a look at Ethereum here. Higher lows over time. Two higher lows here, another higher low here, and two more higher lows here, right? It's clearly on a trend line here. And again, our points of resistance, wedging in, setting up for a potential breakout here into the coming months. This is a really solid looking trend here, whereas we can start to establish higher lows away from the trend line, come up here, break through resistance, come here back down to support and really start to climb higher. Don't take my Picasso drawings as TA at heart. Basically, don't take it as an absolute finite trend line that has, or finalized trend line that has to happen. All I'm trying to present here is that the setup here on these ratios showcases that, as history has shown previously through good times and bad, crypto can fill various different narratives, various different use cases in the world. And because of that, through good times and bad, it tends to outperform other asset classes on an annualized basis. And it's a big point why I always talk about here in the channel about why the need to panic when the market is down 30 or 50%, like we have been since back in November. Why panic? Because there's not many other better places to go. You're going to go back to currencies that are constantly getting printed away by governments and central banks on an annualized basis. We know how that story goes. You're going to go to the equity markets or to bonds or to property, which can sometimes give you returns, but can also get absolutely wiped away depending on the time you get into the market, and takes years to recover in some cases. Or you're going to go to an asset class that in the last 11, 12 years has continued to be, on an annualized return basis, the best performing asset class. I think that crypto is the asset class we need to continue focusing on here, guys. It's the reason we talk about it so much here on the channel. I'm not married to crypto, but I do think the potential here is really nice. And to see that we're not instead breaking through this trend line and going lower, as most people probably would have thought, those who are claiming the correlation of the stock market and crypto assets. We're not seeing this. I think this is a really important telltale sign that we just simply cannot ignore here when it comes to assets, okay? So let's go ahead and take a look at another key metric here. Now, you all know that we started to use Bookmap here on the channel. It's a really cool metric tracker to really help us understand the dynamics that drive market price. We can see all the while in price here that all the while there had been some sell side activity that's been dragging down Ethereum's price. We're taking a look here from around the start of March, here start of the month. Ethereum has come down from around a little under $3,000 down here to 259, went down to a low here of about 2450, I think. And most people have been really panicking, thinking, oh, we're coming back to the lows again. It's a doomsday scenario. All is lost for crypto. But if you dive a little bit deeper than price and we start to analyze some of the key metrics that showcase what the market is doing, you'll find that this is very, very short term. Let's go ahead and take a dive into it. First off, I want to take kind of bring your attention here to the CVD, the cumulative volume delta. This showcases us what the market order flow, people who are either buying or selling into the order book, right? Are there more people taking the best available price to buy or the best available price to sell their crypto? All right, and we can see here that since here, back here, I think around March 2nd, at the beginning of the month, the trend was relatively neutral. We started to see massive market order flow, mainly here between March 3rd and March 5th. And that cumulative volume delta has been holding here. It's equal between buyers and sellers. And that's really stunted a lot of the decline here in price because we filled in a lot of those asks on the order book. And now we've got much stronger limit orders here than we did back a couple days ago at these key price ranges. It's going to be much more difficult for Ethereum to come down in these price ranges because we're going to need thousands upon thousands of ETH, roughly speaking. This is just on Coinbase, let alone, right? If you take a look at the aggregate order book, you're going to need tens of thousands of ETH to really be sold on the market to get down below this price range. And that's not considering the fact that there might be more ads on the order book. So the trend is looking quite confident here for Ethereum. All the while, I understand it's easy to get carried away in price. There's a lot of strength we're seeing here at the moment on Bookmap. So if you guys are interested in checking out Bookmap or kind of getting these market insights, you can always check the link down below in the description. They're one of our partners here on the channel. Absolutely love using the tool. And it's helped me to, again, follow the things that I really like in the market, which is market order flow, right? That cumulative volume delta. And on top of that as well, seeing the heat map over time, how the order book is changing, right? As we can see over time, we're seeing this increase here in new limit orders as time progresses. More people willing to buy at these price ranges. And that's providing effective support unless sellers can really breach through that, right? We can even zoom in here as well on the shorter time frame, and we can see that the limit orders here to buy are a lot more aggressive here than what we're seeing here on the sell side. Very interesting stuff here. Now, going back here again, I think the trend is very clear here, guys, that people are looking for effective risk-off or hedging assets. We're seeing gold spiking up. We're seeing other types of commodities starting to go up in price. Precious metals finally look like they're having their day to some degree. And I think this all comes back to the point that I want to emphasize here, that now is not the time to FUD out of crypto. Now, maybe if you're in NFTs, maybe if you're in a protocol that's a little too speculative, that doesn't really benefit in a risk-off environment, yeah, maybe you want to start to kind of de-expose yourself, right? That's up to you. You understand your risk profile. What I want to really champion here is how Bitcoin and Ethereum could really start to have their day. Some of these leading cryptos could start to pick up. And it's not just these two, there's probably others as well. But I don't want to make too bold of a claim here. I don't know which cryptos are going to go up and down, right? What I do want to say is that if there are any that have a good chance of doing it in this environment, it's Bitcoin, Ethereum, and other leading cryptos. And the ratios, the market information that we have at our disposal are showcasing it to us. People are eager to get out of fiat. They're eager to get out of other assets. They're eager to get into something that is not correlated with the craziness that is going on in the world right now. And I can only hope and pray. I want to make this very clear here, guys. As I'm here to do market analysis and help you guys prepare and hedge yourselves as best as possible, it comes from the best place in my heart. I hope and I pray to God that this whole situation doesn't get worse, because I can promise you, no one wants what could come, the potential of how bad things could get here in the world when it comes to the Ukraine-Russian war and conflict. If it serves as a domino towards a much larger strand of dominoes, that's going to be very scary. And I hope and pray that that doesn't happen. But it would be foolish for any of us, including myself, not to consider that crypto probably plays as a very high-level hedge against these events, and that it makes sense to at least have some exposure to it during these times. And all the while, it's not financial advice. I hope my money speaks louder than my words. I'm exposed to crypto. I believe in it in this time. I'm not panicking left and right, trading this and that. I'm just holding my crypto for the most part, because I watch these signs through the good times and the bad. I try to focus on the longer trend. And as you all might remember back a couple months ago, when everyone was shouting that crypto is in a bear market, back in May of 2021, and November to January, going into 2022, we'll always be here because we have our eyes, our sight on the longer term trend. And having this understanding of the macro world, all the while I'm limited in some capacities, as anyone is, I think we've got a really good perspective of how things could continue to grow the way they are, and how crypto could play its role in the world. Now, if you are looking to get exposure to crypto, and you're looking to potentially protect yourself for the long term, one thing you can definitely check out is our sponsor for today's video, which is iTrust Capital. They're one of our long-term partners here on the channel. They're a crypto IRA solution that allows you to maximize your contribution of $6,000 to $7,000 in the United States into an individual retirement account, so you can defer your tax obligations, both for income gains as well as capital gains. And you're able to invest in a wide range of different cryptocurrency assets from within your IRA, trading in and out of the market if you really wanted to take profits along the way. It's one of the really cool platforms out there, one of the most competitive when it comes to pricing and the features, customer service, and support that they offer. And I highly recommend, if you guys are interested, to check them out down below. So that being said, everyone, thank you all so much for watching today's video. If you like this one, consider dropping a like, consider subscribing, and hitting that bell icon. And above all, whether you agree or disagree, totally open to having a conversation with you guys. Leave a comment down below on your thoughts on this video. If you have any feedback, positive or negative, let me know. Anyways, guys, take care. I'll see you all in the next video.